On this episode of the Mortgage Note Podcast, we speak with Brian Holland, the CEO of Atlantic Bay Mortgage Group, which is celebrating its 30th year in business.
It's our 30th year in business, and we have an amazing team that has allowed us to exist for 30 years as the same brand, which is pretty difficult to do in any business, but especially this crazy mortgage business that we're in. Yeah, so we're kind of a mid-Atlantic Southeast company. As we've built over the years, it was really important to me that we were close enough that we could physically, be in front of our people consistently. So we've never really wanted to have a national footprint. We've always wanted to be more of a regional player, which allowed us to support our people, but most importantly to me, to maintain our culture. I mean, I feel like culture is kind of an overused term these days, but I mean, we really live out our core values. We keep them simple, and it's again what's allowed us to maintain what we've built over the last 30 years. So that's truly important to us. So we're kind of, if you're on the map, kind of, Northern Virginia, Maryland. We got west to kind of Kentucky, down to Alabama, Georgia, a little bit of Florida, South Carolina, North Carolina, Virginia. So mid-Atlantic Southeast. Our goal is that we don't want to be in a market unless we feel like we can be a top 5 purchase lender. We really focus on the purchase market. I think the HMDA stats just came out, and we were the number 22 purchase lender in the country, even though we're only in a small, geographic area of the country, and not in some of the larger, highly populated states.
So you're the founder of the company that's based there in Virginia. Tell us a little bit about your background. It doesn't seem likely that somebody woke up one day and I'm going to found a mortgage company. So I'm sure there's some sort of journey that brought you to where you are at not only this point, but at that point 30 years ago.
For sure. I had this conversation with my 12-year-old daughter the other day. I said, no one wakes up when they're 12 wants to be a mortgage banker, right? It just doesn't happen. So it's a funny story, and I'll try and go quickly. But I grew up in a rural area in a double-wide trailer, railroad track across the street from my trailer, and a cornfield in the backyard. Had no idea what I wanted to do when I grew up, but I really like Monopoly and I like money. And so I was able to find something with both. I was waiting tables at Red Lobster. It's just amazing to me how these what are called loose connections can make a big change in your life. And I just graduated. I waited tables all through college. I just graduated from Old Dominion University with a finance degree. And one day at Red Lobster, a manager calls and says, "Hey, I need to talk to. Let me get Brian on the phone." And I picked up the phone. I said, "Hey, Dave, what's going on?" He said, "Well, you can't tell anyone, but I'm trying to get out of the restaurant business and get in the mortgage business. And I think you would be great." And I said, "Well, why do you think I'd be great at the mortgage business? I know nothing about it." He said, "Well, you've got a degree in finance and you sell the most strawberry daiquiris of any of my servers. So I think you can sell and you know numbers." And basically, I went in, and it was kind of a fly-by-night brokerage shop, it felt like. And they handed me a cross-reference directory with people's names, address, and phone numbers. And my training class was, hey, start calling people and ask them to refinance their loan. And I did it. I got one and another and another. And then 3 months later, I was assistant branch manager. And then about 3 years after that, about 3.5 years in, founded Atlantic Bay. And also, most importantly to me, I met my lovely bride at Red Lobster as well. She was a server there. So Red Lobster, even though they just went bankrupt recently, was a key point in my life. So that's how we started. I mean, I worked for this brokerage, and I was doing really well. I was really young, and I just wanted to do it on my own. I felt like I could do it better. I could have the kind of culture and team that we wanted to have. So we got started with a few great people and just kept adding people over and over again. I mean, I think that one of the reasons for our success, I think a lot of companies hire good people, but they don't do a great job of retaining people that are awesome. And that's really our focus, is we want to treat people the way that they want to be treated, so they stay long term, so we don't have the turnover that a lot of people have in the industry.
And how far have you branched out now? How many employees are we looking at this point, and what sort of the number of the people that you've helped get into a home or refi a home?
Well, we have just under 700 people on our team, and we've helped a few 100,000 over the 30 years that we've been in business. It's incredible, how many lives we've been able to touch, over the years, and families. And that's really the great part about this business, is that you have the opportunity to help people live out the American dream. Right. I mean, it's still, I've got three kids, 25, 23, and 12. Same wife. We just spread it out a little bit. But there was a few years there where people were saying, "Oh, these younger people don't want to own homes, and they'd rather rent." And I think that this early 20 something are really seeing that the gap between home ownership from a wealth standpoint, the non-homeowner and homeowner, is huge. So that it's just a great way to build wealth, build a life, and have a place to raise a family. So I feel like this younger generation of 20 somethings is getting back to that's a true part of the American dream, is to own a home.
Now, since you made reference to that, and yes, that is a recent trend that I've heard over and over and over, the young people don't want to own, but us slightly older folks, we understand that that is a good tool for wealth building. The time that you've been involved with this, you've seen a lot of trends, and that's just one trend recently of the younger folks saying that they don't want to own. And I feel that that's just that they haven't been educated to the benefits of it yet in a lot of cases. But I'm sure you've seen a lot of trends up and down. I mean, the past handful of years since the pandemic, we've seen, of course, an increase in interest rates that took us back to rates that we were seeing in the early 80s. And that's caused quite a shift in the market. 2008, of course, saw the bubble burst, so to speak, in real estate. So over this time, you've covered several trends that you've adjusted to and clearly survived through. Um, what sort of trends stand out to you over that time? And what are we looking at now that young people and even middle-aged folks that are looking to buy a second time sort of need to keep their eye on, or at least be aware of, out there, that's affecting the ability to borrow?
Well, I think that there's currently, I'll talk about currently what I see, and then I'll step back to some of the things we've seen in the past. I think that there's a misconception that, getting a loan is very difficult now, just because it's not as easy as it was at one point. I think that there's a misconception that because there's documentation, because there's things that have to be supplied, that it's difficult to get a loan. I don't think it's difficult to get a loan, but there's a huge affordability problem, and that's something that is concerning, especially for the young people. So we got two factors going on. One is what we have kind of termed in our industry is the great lockdown, which you've got all these people that are at 3% mortgages, and for the last number of years, they wanted to buy a new home, buy a bigger home, move to a different area, but they feel constrained because if they have to go from their 3% rate to their seven, 6, 7, whatever, wherever the market is and has been, it's a very difficult proposition to say, hey, do I really want that home that much that I'm going to increase, potentially double my mortgage payment? So that's certainly been a challenge. The other thing that we're facing, and I've had this discussion with many people, and people will point back to the 80s where, oh, well, rates have been at 18%, and when my so and so bought a house, it was 18%. I was like, yeah, but the average home price was so much less. And it's not just the rates, it's not just the home price, this is the combination. What people really care about and they're focused on is their payment to their income, right? Their debt to income ratio. So if homes are really low value or low price and rates are higher, you can live with that. When rates are higher and home prices have appreciated so much, it's an affordability problem. And that's what we have to figure out, especially for this younger generation, and for, as you mentioned, for the buyers. So I think that we are seeing a little bit more supply, which is good. If we could lose some regulation in the cities and the states on building and allow, faster building, less fees, and get more supply, that's going to moderate things and will hopefully help moderate prices, which again will go to that payment versus income, which is really what most people are focused on is, can I have a life and still afford a mortgage because I don't want to spend every penny, on my mortgage payment.
Right, that can be quite a bind if you get the mortgage and, income ratio a bit out of whack. People can overdo it.
Sure.
Um, so for the first time home buyer, and then we'll touch, a little bit on the up buyer. For the first time home buyer, they decide they wanna look at a home, and they come to you in that process as a means of being able to pay for the home. What does a family or a young couple need to do ahead of time to come to you and be prepared for this sort of purchase?
Well, especially in a competitive environment, which they see. I mean, a lot of people are, someone lists if they list a home properly on a proper price, they're getting multiple offers and that type of thing. So if they go to us or another mortgage company and get approved for the mortgage, get a full approval, it gives them a lot stronger stance when they're putting in an offer because they can put in that offer and it's no question of whether they're going to get the loan or not because the borrower is totally approved. We just need to approve the property. So I would highly encourage a younger person or anyone who's looking for a home to get a fully approved mortgage. It's pretty easy. It's not going to take you very long to get that. You've got your approved mortgage, and then when you go out to buy, you've got a lot stronger case for that potential seller that may be getting multiple offers. Is, hey, well, this person's approved, and they could potentially close in 10 days or so, versus a buyer that's just been pre-qualified, which is a big difference. They're kind of starting the process over and will likely take 45 to 60 days. So timing could be important for the seller. Also, kind of more of a bird in hand when you know that that borrower is already qualified. So I would highly encourage, if you're looking for a home, to get out and get approved prior to shopping.
Can you explain a little more detail the difference or and the importance of pre-qualified versus pre-approval and that stage in the process?
Sure. So pre-qualification is simply, you are on the phone or online. You're quoting, how much income you have. Pull a credit report, a basic credit report. Typically, you tell the person what kind of assets you have, how much you have for a down payment, et cetera, et cetera. And then they'll say, okay, this is approximately what you could buy, right? But there'll be a lot of disclosures out of that to say, I'm not guaranteeing this. Nothing's been verified. Da 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 da. Versus if you get a fully approved, with what we call a TBD, a to be determined property, then we have your assets, we get your income, we do a full credit check, we do everything and totally approve the borrower with the exception of the property. So then once the property is chosen, we have to get an appraisal on the property, and then we can move forward quickly to closing. So the first is more of a, ballpark estimate. If what you say is accurate, it's going to be approved. And there's a lot of ways out of those, what people call a pre-qualification letter versus approval is a lot tighter situation where if the property's approved and it's at the right number, that borrower is going to be approved and closed really quickly.
So if you go through that extended process, so to speak, then when you actually go to the field looking for properties, you've built your arsenal quite a bit more.
Absolutely, especially in a competitive market where you have multiple offers coming in, and you've got a realtor laying these three offers out for the seller and say, hey, well, this one is this one's this one's this, but this one can close in 10 days. You never know what the seller's situation is. I mean, not often do they have to close that quickly, but they have that opportunity, and they know that the loan is already approved, the income and the assets and the credit have been verified. So it's a big difference.
Okay. Stepping away from that process just a little bit, I understand that Atlantic Bay also has a nonprofit arm and a philanthropy arm, so to speak, that you guys branch out into other sort of venues of the community.
Absolutely, yeah. We have our Atlantic Bay Foundation, Atlantic Bay Cares. When I grew up in the double wide trailer, I was really motivated to be successful financially. That has, what motivates you in life is, can change, and that's fine. And now it's really helping other people, seeing other people grow. And we have two kind of main corporate organizations that we work with closely with our foundation. We sponsor a lot of things, but the Rock Solid Foundation, where we build playgrounds for children fighting pediatric cancer. And then the Boys and Girls Club are kind of our two main focuses from a corporate standpoint. But we have a foundation, we have a board, we meet monthly, and we have a budget where the board decides where we're going to spend those funds. Giving back, we've been so fortunate. Our team has been so fortunate over the last 30 years that, we really want to support the communities that we live in. And there's nothing better. I mean, one of the greatest experiences I've had, and I've done it dozens of times, is when you go into a backyard on a Saturday morning with a little boy or little girl fighting cancer and their siblings, and you have 15 or 20 people, and you've got this empty backyard, and you landscape it, and you put this beautiful playground in it, and then the child that's fighting cancer runs out. Typically they don't have any hair because they're going through treatment. And you see that smile on their face where they're actually allowed to play and live for a few minutes and not think about cancer. It's just such an amazing experience. And I've done, tons of those with my kids. My 12-year-old daughter, we just had all of her friends out a couple weeks ago and we did a build. So giving back is so important, especially when you've been rewarded as we have by the people in our communities. We love giving back.
How did you find yourself motivated to go in that direction as far as your philanthropy efforts?
With my family's philanthropy, as well as the companies, we've just decided that we have, you get a lot of requests for a lot of great causes. There's so many out there. You have to kind of narrow it down. And we've just decided that we want to focus on children, children's causes. My wife's on the board of Tidewater Friends of Foster Care, which is a foster care organization, which does great work. And then kids just really don't have the ability to help themselves. So we just try and focus all the charitable giving we do on kids. We do some other things like Feeding America, which obviously helps kids, but helps adults as well. But kids are our focus. I just, they can't do it on their own. They need some support. They need other people, and so that's the route that we've chosen with our philanthropy.
When you look back on these 30 years that Atlantic Bay has been around, any career can become, I don't want to say monotonous necessarily, but it can absorb a degree of sameness. And after 30 years, that's a long period of, you know, nose to the grindstone and being repetitive. But you still sound very excited about your work. What is it about this sort of business and what you're able to accomplish with the company that keeps you motivated, to keeps you happy to go into the office and makes it still sort of a personal endeavor for you?
Yeah, well, I think, I've told our team for years, I said, we're going to keep growing as long as we can continue to maintain our culture. If our culture starts to slip, we're going to stop. We're going to stop growing and I'm not going to have any fun. And really quickly, our three core values are: one, we genuinely care; two, we inspire growth; and three, we have fun. And all of those things have allowed us to kind of keep this going for years and years. And when we genuinely care and we're taking care of our people, they're taking care of the communities we live in, and just seeing the great stories of our people who started off as a part-time receptionist and now as a director of a department, and then doing fun things like we had our spring fling last week in Charlotte. We had a spring fling recently in Virginia Beach. We had our company 30-year anniversary party. We just like to have fun. And um, people should enjoy what they do. They should be passionate about it. They should be fascinated about it. I recently read a book for younger people to say, they tell you that, how do you decide what you want to do? Find something you're fascinated about. And I'm fascinated by this industry still, and just the joy it gives people to have that ownership, to have that, feeling of worth when they buy their first home and a place to have their family and have that raise their family. It's a great business to be in. It's very hard. It's very stressful. That's why everyone doesn't do it, but it's a great business.
So now that you've reached the 30-year benchmark, what are you looking forward to as far as the future of the company, and what are you seeing as potentially future trends in the mortgage business as well?
Well, as everyone's talking about, there's AI and there's technology, and we are building some of the best technology. We have a team who's building technology for us, and we really wanted to be a seamless experience for our borrowers, where their first connection with us is in one spot, and then everything they do from us till their closing is in one spot. They make their payments in one place, and then what we call is it's hello to hello again. So we want them to be able to go into a one portal, live in that portal. And one of the things that we're really trying to do with our borrowers is give them peace of mind. And so one of our programs is, hey, look, when you do your loan, we're going to monitor your loan for you. And if rates go down and you're always wondering, hey, should I refinance? Should I not refinance? That's something that we're going to be focused on for you. And we're going to track that and say, hey, you tell us how much money you want to save, or, how much rate you would like to save on your refinance. You don't have to worry about the outside noise all the time, and where rates are going is something that we're going to keep track for you. So the AI to be able to do that, the technology to do it, the ease of use. And I really think in the next 3 to 4 years, the closing time from a loan is going to be on average, about a third of what it is right now. I'd say the average is just, 45 days or so. And I can see that going down into the teens, the mid to upper teens as it goes to loans. I just think it's going to continue to be easier. We're going to be able to push the cost down to do a loan and be way more efficient and be able to be who the borrowers want. I've been a lot of conversation over the last 20 years about, will mortgages go totally digital? Will they not ever talk to a person? And I think that there's still something about this transaction that's different than any other. It's typically the biggest investment people are going to make in their lives, and they want that personal touch. They want that person that's going to be able to answer their questions, hold their hand, and make sure that they totally understand what they're getting into. I don't see that leaving the business, but I do see more speed, more ease, and just, more information out there. And we're trying to provide as much information as we can to our borrowers so they're educated.
I guess to wrap it up, if you could speak to everybody at once to gear them not only toward Anchor Bay, but also to educate them about the process of getting a mortgage and to sort of put them at ease about it, what do you think you'd say?
Well, first of all, I'd love for all of you to come to Atlantic Bay. But more importantly than that, I mean, I think buying a home, I think understanding that the average homeowner versus non-homeowner have 3 to 4x in net worth, right? So it's a way to build wealth. It's a way to create value, for your family. And it's not as onerous as you would think. If you're that person that wants to talk through it with someone and give all of your documentation, that's fine. If you're that person where we can send a link, you connect your payroll, your bank statements securely, all that in there, and you can do it all yourself at midnight on your iPad. We're trying to speak to the individuals and do what they want. But I'm just a strong believer. We have lots of tools that we can show people on renting versus owning, and the financials between the two. Obviously, I am, because I've been doing this for over 30 years. But I'm just such a huge proponent of being a homeowner. The value it creates in your family, the value it creates in your financial situation, your net worth. Do it. I know it's not. I know it may seem cumbersome, but it's not as hard as you think.
You can learn more about Atlantic Bay Mortgage Group at atlanticbay.com. This has been the Mortgage Note Podcast. I'm Scott Kimbler.